Well, hi everyone, we're back again with another Meet the Manager series. We're very pleased today to have Sunil Shah from O2h Investments. Sunil, let's kick off with you. How are you? Are you well? Tell us a little bit more about yourself and the fund.
Thanks, Mark. Yeah, it's a pleasure to do this. So my name's Sunil Shah. I'm the fund manager of the O2h Human Healthcare Fund. Essentially, we have two funds, which is an SCIS fund and a knowledge intensive fund, and we invest in biotech therapeutics. I myself am an entrepreneur by background. I've built and sold a company in the research services space, and then we started investing into the biotech area in therapeutics. So building on our network and the experiences we had earlier.
Most importantly, Sunil, are you still Angel Investor of the Year?
I carried that baton for the extra 6 months because of the whole COVID experience. So officially, I am. I think still UK Business Angel of the Year, but yeah, maybe that will go to someone else in the very near future.
Wrung another 6 months out of it. Congratulations.
Yeah, squeeze it out.
Exactly. Look, the first thing I want to talk to you about today is approved funds and knowledge intensive funds, because this is something HMRC brought in maybe 18 months ago. The first idea was mooted, and gradually they've worked with a couple of funds like yourself to get this going. So, do you want to tell us a little bit about the fund itself and what it means, and a little bit about why you've done it? Because I know there's only one or two on the market at the moment. So, why you guys have put one forward?
Yeah, so we basically invest in biotech therapeutics. So we're quite a specialized fund, and within that, there's three buckets that we invest into. One is into where AI and machine learning can help support drug discovery and the whole process. The second is where the typical biotech therapeutics, where you're investing into a particular drug, and the third area is services companies within the space. So there's three buckets that we invest into, and we think it's an interesting area because over the last decade, big pharma have been closing down their R&D sites literally across the globe, and they need to acquire assets, ideas, innovations much earlier than they ever used to. And so they're the biotechs that we invest into. We're hopefully looking to the big pharma, the GSKs, the Pfizers of the world, to license, option, acquire some of the assets that we work on. So that's kind of the backdrop to the fund, as it were. We're very specialist biotech therapeutics. We have a fairly substantial team behind us within O2h that can do all the relevant due diligence into that area. We're very well networked in the space. We've had our own exits within the area, so it's a space we know quite a bit about. And we thought the knowledge intensive fund was particularly appropriate for biotech investing because KI, or knowledge intensive, everything we do is knowledge intensive in biotech. So we fit the bucket very well, or fit the space very well. And I guess a key advantage of being an HMRC approved knowledge intensive fund is that there's predictability of when you can get your tax reliefs. So in a normal EIS fund, you only get the tax relief when the fund deploys the capital, which could be 6 months, 1 year, 18 months after you actually invest into the fund. But with the KI fund, you get the release as if the money is deployed on the day you invest into the actual fund. So that gives you a lot more predictability. So our next close is on April the 1st, and any money we take in on April the 1st, even though we invest it in the next tax year, it's as we invested it in this tax year today, so you can get the carry back to last year or to this year. And I think that's the biggest advantage. There are other advantages around the quanta, etc., but I think for most investors that would be the most significant advantage.
And just kind of just having a glossary of terms here, if you like. Knowledge intensive, kind of what does that mean for companies? What does that mean, the type of companies you're going to be investing into as an investor? I assume it's more research and development, more technology at the front end. Just give us an idea of what a knowledge intensive company kind of looks like.
So typically we will, I'll give a few examples, probably the easiest way. So we invested in a company called Exonate that spun out of Nottingham. It's developing a drug for macular degenerative disease, wet AMD. We angel invested in originally before we had the fund, and then we continue to invest from the fund. Most recently, they've signed a collaborative deal with Janssen, which is essentially Johnson & Johnson, which could yield significant 100 millions of milestones down the road if it's successful. No more funding is required into the company if it chooses not to raise money, and a royalty stream at the back end. So biotech therapeutics can be a very lucrative space to invest into if the science works. You're investing in the science and the innovation, if that works well, but it's not always so high risk. So we've also invested in a company called Metrion, and we're investing again right now. So second time we're investing. They're a revenue generating company, and they service the biotech space. So they create revenues from a service that they undertake in the ion channel space. So very specific, but that's a different risk mitigation strategy really for the pure play therapeutics. And the AI or machine learning, from a business perspective, they do more collaborative deals with pharma. So they may be a bit of a hybrid where there's some service revenues that come on the back of the tech, but also, you know, the developing assets as well. So it's a very mixed model in terms of the type of things we do, but we invest in a whole, you know, we've invested in around 20 odd companies today. And so, yeah.
And Metreon, the example you gave there,
Yep.
that's knowledge intensive because of those assets it has in it, because of the research development it's doing. It's not just taking something that's existing, it's building something completely new, completely innovative. And that's where the knowledge intensive bit comes in, is it?
Yeah, exactly. They have a deep expertise in the ion channel space, and they continue to develop and build that, as well as have one of their own assets as well. So they would qualify for the amount of R&D they do in the cell lines and the other areas around that.
Sure. And then knowledge intensive also means, from a kind of HMRC point of view, that you can invest more into that company and over longer time periods as well, and more for investors as well.
Yeah, I mean, there's other benefits in terms of the amount of money you can put into a company, the amount of invest an angel or an investor can, a high net worth can invest into a knowledge intensive company, amount they can take on in the timelines as well. So there's a whole load of other benefits, but I think the key benefit, as I mentioned, is for most people will be the predictability of the tax benefit. That, you know, even though, because as an EIS fund at the end of tax year, we had a lot of IFAs come to us say, look, we can give you this money, but you have to invest it before April the 5th, and you get the money on March the 15th, and you can end up making bad investments just because you're under such pressure to deploy the capital before the April the 5th. Because we can take that money on and not be under the pressure to have to deploy the capital just because for tax reasons. We can deploy that capital in the right companies in the right time frame, and investors can still have the predictability of the tax that they put the money into us. They can go back to 2019, 2020 tax year. And I think that is a huge benefit.
Okay, so you get the money in, investor knows what tax year they're going to be invested, and then you've got time, but a breathing space to actually deploy that money and not have to worry about just getting it out there and spraying and praying in that sense about just getting the money deployed and getting invested to tax. And I guess that's different from a normal, in inverted commas, EIS fund. It might be a discretionary managed portfolio, so you might be investing in different companies throughout a year. You get different tax certificates at different times of the year, and possibly over different tax years. So it's giving you that certainty over the timing of the tax year.
I think absolutely right, Mark.
Brilliant. All right, that's all.
You summarised it better than I could. So.
I should do. I do this. Brilliant. The other question I wanted to ask you was, you talked about biotech a lot, and again, across the return. So I know there's biotech, there's medtech, there's other sorts of tech. What's the difference between biotech and medtech? You know, some funds have a different kind of philosophy. Is there a difference, or is it just kind of terminology?
Yeah, I mean, we're the only biotech therapeutics fund. I think, you know, biotech is a very broad word. It can mean medical devices. It can mean something that a stint that you use in a surgery. It's got, you know, can mean a diagnostic. But we focus on therapeutics within the biotech space, and to do due diligence on the full gamut of things is very, very difficult. And most early stage funds would not be able to do that, I would say. But to focus down on the therapeutic area, so we, you know, which is, I think, the most interesting part of the whole biotech space, to focus down on that one area and be able to do due diligence and have the right skill set internally to be able to do that, I think it's very much really on developing drugs and drugs to treat particular therapeutic areas. So that's really when I mean biotech therapeutics, we're developing drugs for people to take, essentially. I mean, that's the easiest way of putting it.
Okay, and I'm feeling particularly dumb here, but therapeutics? Give me a definition of therapeutics.
Yeah, so it could be like on cancer or Alzheimer's disease. So we're developing drugs to treat diseases that are
so it is
hard
drugs,
to treat.
Therapies for those.
Yeah, it's therapeutic. So it's like you know, we have several projects running in the oncology space. There's a lot of deals that happen within the oncology space. For an investment fund, it's very active, an active area. A lot of M&A that happens within that space. The most in terms of any other therapeutics happen in the oncology space, even very early stage. So I think it's an active area for most biotech funds, including us, but also neurosciences, Alzheimer's. We've got something in the anti-aging. We've got a psychedelic that we've invested into, which is doing a reverse into into a company on the Toronto Stock Exchange right now. We've got macular degenerative disease, which I mentioned, which is eye disease. Yeah, we've got a fairly broad range of therapeutic areas that we invest into. So we don't really focus in on one therapeutic area. Some funds do that, but because we're early stage, we can be a little bit broader, I think.
Okay. And obviously, all of this is really, really topical at the moment. What's happening in the world and what's happening over the last 9, 12 months. I used to say last 3, 6 months, but now it's 9 and 12. It just keeps moving out, doesn't it? But so yeah, as I say, it's really topical at the moment. What's happening with COVID? Does that mean there's more focus on the market for you guys? Does that mean there's more companies to see? Does it mean there's more money coming in as well, or how's kind of the whole industry looking at the moment?
We definitely have had a sort of tailwind in the biotech sector. I mean, unlike most some other sectors which have been really troubled by the whole COVID, we kind of got a bit of a boost actually. And that I think with the vaccine development program in the UK, the manufacturing that supported that as well to give us a supply chain. We've seen that the UK and the scientists in the UK can punch way above their weight really in terms of the whole biotech therapeutic space. So that whole vaccine space, a lot of those people are connected with people that we know within the fund. And so that whole area has been given a boost, quite frankly. And and also investors are much more clued into the importance of science. They understand a lot more about science than they did a year ago, just because we're being educated through the news, etc. So there's a lot more knowledge around the space, an understanding of the importance to have a thriving science and technology community, but also the economic value of having science that can push forward. So definitely there's a bigger tailwind. There's a huge amount of new money coming into the sector. It's mainly at the Series A and Series B down the road. But that does mean that the seed assets prices are almost hiked now because there's more competition. If a seed investment comes through and does well, there's more competition. And I think the Series A, Series B prices have definitely, we've seen them rise. But where we invest at the pre-seed seed level, the valuation has stayed very, very attractive. I think fairly level still, but if we can help them get through that stage from a seed investment to a Series A investment, I think there's a huge amount of value to be made there, and that's kind of where we act.
And of course, at that seed stage, the first money in literally into these companies where you guys are operating is where the government wants to aim the knowledge intensive fund that we talked about earlier.
Yep.
There's a recognition of the fact that the patient capital review back in 2017, that it's early startup companies, particularly in medtech and biotech, who don't get the funding or struggle most to kind of access funding. So I guess you're very neatly fitting into that slot, I guess.
Yeah, we do fit into really what the government's trying to push post Brexit in terms of a value adding area for the whole for the UK and where the high value jobs are. And I think they will be filling up the wellies of things like Innovate UK, which does provide a lot of soft money into the biotech space. One of our companies, Oxford Drug Design, got $11 million of soft money, potential soft money, milestone driven, from not only the UK government, but also, I mean, they're developing an antibiotic, and there's a trust called Carbex, which is Wellcome Trust money, US government money, that basically see a need for new antibiotics, and they've put a pot of money together to fund the best ones. And one of our companies was managed to achieve a significant award from Carbex. So there's also a lot of soft money coming in, and I imagine the Chancellor will be announcing various positive things to support and help the biotech community in the biotech space. So I expect more to come.
Yeah, it's an interesting. I mean, the interesting example I saw recently was obviously Pfizer and BioNTech. BioNTech was seen as a startup company, or was seen as a startup company a few years ago. Yep. They started up with £300 million.
Yeah.
Of dollars, I should say, because obviously in America. But over here, obviously those kind of figures are just telephone numbers. So it's interesting to see the diversity between here and the States and difficulties in raising here compared to the States.
But I think the seed stage, it's hard anywhere. But I do feel it's harder in the UK, but that does mean that we pretty much see a lot of the good quality assets that come through. And given the size of our fund, we are able to see them and invest in them. I think if we're in the US, we probably, the bigger very large funds would probably would hoover it all up, and we see very little of it. But that also means that we can triage that a little bit. So we can invest, we can take things forward, and then at the Series A and Series B, the American investors can come in with the bigger tickets. They generally won't invest into seed stage in the UK, but once it gets to a clinical asset like Exonate now is, then I think it will attract international investment. And also NASDAQ is very vibrant right now. So I think that creates lots of opportunities for our biotechs as well. Because with Zoom and everything else now, and the whole world's a lot smaller, and it doesn't matter if you're in San Francisco, Boston, or Utah, or Cambridge, or Oxford, or London, wherever else. You still have to be on a Zoom call to raise that finance to go on NASDAQ. So we're seeing a lot of a greater number of UK companies floating on NASDAQ, and I think that will create exit opportunities for our startups as well.
Yeah, it definitely seems like the UK wants to be the centre of all things science. It's interesting to see, I think, with the head of the vaccination committee is Kate Bingham, who used to be a VC, obviously in this area as well. So hopefully it's kind of trying to marry up the money with the sector at the same time. Give us an idea of a couple of companies coming through that you're looking at or investing at the moment. Obviously, we're in a hopefully moving towards a post-COVID world. Give us an idea of kind of the deal flow and companies you're seeing at the moment.
Yeah. So a few investments we're doing this week or next week pretty much is, so we're investing in a company called Stingray Bio, which is spinning out of Sussex University. They're developing potentially a breast cancer drug as a target called LMTK3. And we are seeding that, so it's very, very early stage, but we are putting the first money in through our SEIS fund, and then that will hopefully follow from the knowledge intensive if they meet certain milestones. And we're going in, a similar stage at which we went into Exonate, so I think it could follow that same path. We're investing into a company called Koana that is using quantum computing to evaluate various drug targets. I think it could be, so they're looking at 3 or 4 different drug targets to that will essentially, if their technology works well, it will shorten that time horizon for discovering and developing a drug, because you'll be able to shorten that discovery process by a good number of years if that works well, pretty much by the press of a button. And I think that's where the future of AI or machine learning or quantum is in this case, to help support drug discovery, drug development, which at the moment takes a long time and is very expensive. I think with the computing power available right now, some of these technologies will have a huge impact in the pharmaceutical space. We're investing to a slightly more mature company called Foremost, which has a platform to identify new drug targets, and they have collaborations with a number of big pharma, and we're going in with some other well-established investors into Foremost. So we have quite a gambit. We're also investing into Metron, I mentioned, which has a profitable service business, which the money we will give them will help fuel that growth and help them to expand into the US. So yeah, quite a good range and diversity of companies that we're investing to at the moment.
And I'm assuming that's a deliberate plan, is it? You have the SEIS fund to try and find these early stage companies, kind of almost seed fund them a little bit, almost using a bit of an accelerator, but then hopefully they'll graduate on and go on to the knowledge intensive fund.
Hopefully. I mean, the SEIS fund is higher risk because they generally should be early investors, but they have greater tax benefits. Whereas the KI fund, our knowledge intensive fund, is like our flagship fund. So we'll go in with that one, hopefully with a bit more money, and when the opportunity has been de-risked somewhat by the SEIS fund. So that's how the two will marry up and work together.
Brilliant. Okay, Sunil, that's been brilliant. Just another very kind of short, that 10-15 minutes went super quick, but just a short insight into what you guys do. So that's really useful. Just want to give us kind of 30 seconds while I put up on the website, your website here, just so people know where they can find you and find out a bit more. But yeah, just tell us more about what you're planning for kind of end of tax year and moving forward.
So we have two funds running. So we've got the Human Health EIS fund there, which is HMRC approved. The close for that is a very hard close on the 1st of April. And that's because it's monitored and tracked by HMRC. So it's not one that we can extend. They need to know what money is going in, by whom, by what date, so they make sure we can track back the tax on that. The SEIS fund, we're having an early close in March because there's a number of opportunities that we want to put the money into and deploy. They will then run on a 6-monthly funding cycle. So we're moving away from the quarterly funding for the Human Health Fund to a 6-monthly cycle. But yeah, there is a close on the 1st of April, and we have a number of good opportunities that we want to invest into, probably around half from our existing portfolio, and the rest will be some new opportunities as well. But at least more than half will be from our existing, and a number of those can be seen on our website, O2hventures.com, so you can see the kind of things that your money will get deployed into.
Brilliant. That's always a good idea to be able to know what your money's going into. So look, thanks very much for the insights into the biotech and medtech world. Yeah, I feel a little bit brighter having spoken to you for the last 10 minutes or so. So thank you very much. Sunil, thank you very much.
Thank you very much, Mark.
Take care. Bye then.
Bye.